Okay, I'm recording this video after close of trade Friday 17th of September 2010. Thursday we had a pretty quiet day on the markets, and then Friday we had a great day for trading. And last video I did was close of trade on the Wednesday. Unfortunately got out to the email subscribers a little bit late, but I was saying in that video that I expected or was hoping for some kind of blow-off activity which would signal a top. And on the close on Thursday I was looking at this end of trend warning signal on the 40,500 tip bar chart, saying potentially we could stop here. But then on the after hours session after Thursday, before the open on Friday, we had the Oracle and RIM numbers came out, and that was a perfect opportunity for the professionals to push up the market to kind of an extreme and kind of get everybody excited at the open, and a perfect place to take profits and start a downward move. You can see here this is the that bar in the after hours session, this kind of high long range up bar to new highs. It was up about 20 points or 10 points or so here. It actually formed a Rambo pattern, so a potential reversal of an amateur breakout. So that's an amateur up bar like that. But in those after hours sessions, I mean, the professionals don't need very much volume in order to push the market higher because it's so thinly traded. So although it looks like an amateur bar pushing that activity higher, it could easily just be professionals kind of gaming the market a little bit at the open. So for me, that's kind of a really important kind of top. It's a second cyclical turn after an end of trend warning signal here. I always look at those as potential areas of reversal. Monday's activity is going to be very critical, and so is this support level on the 40,500 tip bar chart. So if that gets broken, downtrend kind of starts, we're going to see some activity at the downside. But let me just, I'm getting ahead of myself, let me just go back to some of my other kind of higher time frame charts. So first of all, this is a daily chart of the Emini. You can see last week's activity. We kind of gapped up on the Monday, high volume churn bar, and then 3 or 4 days of pretty light volume. All the volumes were kind of less than the average, about 1.4 million contracts traded. For the week though, we've ended up with a high volume churn bar here. You can see that painted green on better volume, which means that the range was pretty compressed. There's a little blue bar there on better volume, not to be confused with the Pro-Am blue bars for professionals, but this is just showing high volume churn. So we had, the last couple of weeks we had kind of exhaustion or climactic buying activity, those with those red bars, up bars, and then a high volume churn bar. So relatively high volume, but kind of small range. When we look at this in terms of volume patterns for the week, what that means, that's a stopping volume pattern. And not that that's necessarily, picking a reversal point. Stopping volume patterns often just show a deceleration in the activity going upwards, and I think next week's going to be very choppy forming this top until we start a downtrend. When I look at some of the other charts, so on a daily chart, looking at my patterns, last week we didn't see any real volume patterns, kind of distribution patterns at these highs, and I'd like to see something at a turning point, like previously had no demand and Rambo patterns here, profit taking and Rambo patterns here. I mean, up at these highs we got nothing this week, so that's a little bit unusual. And then even when I drop down to the 135-minute chart again, a few days we had a no demand pattern, but you'd like to see quite a few more kind of distribution patterns before seeing a change in trend. So I'm waiting a little bit longer for kind of a change in trend here. And then the other chart that I've been talking about is the better X trend chart. Still not got that kind of exhaustion, climactic buying activity in order to trail this stop up, that we can break it to the downside. But just bear in mind, on a weekly chart here, we're sitting below this really important kind of level. And so the activity I see next week is we're going to see I think some weakness into Monday, Tuesday, and then we're going to pop back up later on to the final top, and then the activity will kind of move down. So daily chart, we're at a cyclical turning point here. I've talked about that. When I drop down to the 45-minute chart, this is this end of trend warning signal. When we get that, in the lower time frames coinciding with a cyclical turn on the higher time frames, that's kind of a high probability change in trend here. And this is the second cyclical turn. If the first end of trend doesn't work out, the second cyclical turn kind of comes along, can mark a top here, very similar to the 40,500 tip bar chart. So I'm looking for a little bit of weakness in the market here, and the next logical place for us to head down to is when we get a cross on either the 81 or the 135-minute chart on this time frame. So this would signal a pullback in an uptrend, and then we'd make a final push back up to an end of trend warning signal on the 135-minute chart. So I think we're going to have kind of weakness Monday, Tuesday, and be caught on the downside. Support will come back in when we get the either 135 or the 81-minute time frame, making a cyclical support here. Just recapping on the bond charts, on the interest rates on bonds, starting to see these really starting to weaken. So the interest rates kind of moving down, therefore bond prices moving up. Interest rates moving down as a sign of kind of economic weakness. On the 5-year kind of bond interest rate, we've had our pullback, a cyclical turn, and that's kind of on the way down, if you like, here. TY, this is 30-year, we've just had our cyclical cross mark on Friday, so we'd expect that to start moving down, bond prices moving up. And then TN, which is the 10-year, yet to actually get that cyclical cross marked on the chart, but we've had the cross in terms of better sine wave. And when I look at the multi-chart activity, so this is the bond market chart, 4,050 tip bar, so a high highest time frame tip bar chart. I look out at the bond markets. So let's just look at this. On better momentum use, we had our exhaustion selling on the downside. We made the next kind of bottom here with a flush signal, flushing out the sellers, and there we go at this bottom here. You can see a few things going on. First of all, there's a Rambo pattern and a little R printed right next to our bullish divergence signal here, and an amateur down bar into these lows. So the amateurs, expecting a continued break to the downside, get wrong-footed, market goes the other way. Now we've come and made a double bottom, if you like, here. Almost identical pattern. Rambo pattern here. Yellow down bar, amateurs pushing to new lows, expecting that to break to new lows, and it doesn't. We reverse, go the other way. Bullish divergence, another couple of flush patterns kind of down here, signaling that all the sellers have sold at this point. We formed a pullback and a downtrend signal here, and there's a way to go to that cyclical cross, but I could easily see us kind of break through here if we get the market kind of the equities market kind of breaking hard on Monday, Tuesday maybe. We'll break through this level and start an uptrend on the bond chart. So this activity is just showing that with this double bottom here, less and less selling going on, more of these kind of bullish divergence patterns, and these two Rambo patterns with amateurs kind of moving into the lows, suggesting the amateurs potentially getting wrong-footed. So I'm looking for that bond chart to start to break out. Let's look at some of the other markets. Copper's been acting pretty strongly, but Thursday we did get our exhaustion buying activity here. We've had a bearish divergence signal here. A little bit of professional activity into those highs with those blue bars up there. So not incredibly weak in terms of copper, but some activity would suggest top being made there. Euro we had end of trend warning signal on Thursday. All these professional bars here, we'd had our exhaustion buying back up into the 130 level, and look at this weaker and weaker buying with better momentum, showing that all these kind of bearish divergence signals here come back down a little bit. We maybe kind of come a little bit too far. We might kind of pop, just test it a little bit, but definitely weakening in terms of the buying activity on the euro and starting to roll over here. Now crude, this one has really started to weaken. I talked about this the other day. When we broke through the pullback level on crude, normally what we see, we break into an uptrend, form a pullback, and then retest the highs with an end of trend warning signal here. When the pullback level is broken like this, comes back up, just kind of kisses that level there with that little bar, kisses that breakout level and starts down, that's a really strong trend. You can see Thursday, Friday we really deteriorated quickly in terms of selling in the crude, and this was the kind of the early sellers here at this point here, back down into the 75 types level. They were just a little bit too early. We kind of float back up, if you like. I always think of this kind of floating back up to the new highs, but the amount of buying activity that goes on is weaker and weaker at these highs at 79. Can't get the rally going. All these bearish divergence signals here. There's this little bearish divergence really close to the zero level here, right back up as we're kissing that support level. Cyclical support becomes resistance, and then we just race to the downside. So crude weakening, showing that there's kind of a weakness in the global economy, growth economy, and so we could see equities starting to come off. And then just looking at my so I've showed you the 40,500 tip bar chart, second cyclical turn. This level here that we've just printed in terms terms of the just to recap, similar pattern here that I was